Hello and welcome to the latest episode of the Fintech Show. This time around it's all about KYC, or Know Your Customer, as we investigate how banks and fintechs alike are getting to know their customers. We'll be delving into the onboarding process of the modern day customer as we speak with Melissa, Global Intelligence, Checkout.com, Aegon, Tandem Bank and eToro.
I'm Barley Laing, I'm the Managing Director of Melissa here in the UK. Melissa are a technology company. We've been in business for over 34 years. We provide solutions to our customers in things like data quality, which is a massive headache for all organizations of any size, as well as identity verification. We also have a new division of the company which looks at particular areas of artificial intelligence. Semantic technologies are something we're looking at very closely to see how they can improve our identity verification capabilities by using those additional AI functions.
So Checkout.com is 7 years old. First Series A actually a few months ago. Number one in the fintech ever, 230 million. So from year one we were making money. Maybe it's quite surprising for fintech, but we were making money and we didn't see the necessity to raise until recently, where I think if you want to go to the next step and really go after all those big clients, Google, Facebook, you really need to up your game and have the money and develop more and more products, because most of that is going to go to developing engineers and everything and new products. And yeah, I joined a company 4 years ago. We were 25, 30, now we're 500. And the goal is to be 1,000 next year, so a lot of hiring.
Aegon are a provider of pensions, investments and protection products, and our purpose is to help customers achieve a lifetime of financial security. Aegon has over 3 million customers in the UK, and we control about 27% of the pension share in the market. We serve a wide variety of customers from all walks of life, through workplace pensions, individual pensions, and really our primary way of distributing is through intermediaries. We believe that both through employers and advisors, our customers will be best supported and be able to make the best choices for their savings products.
I've been talking for quite a while about what needed transforming for the customer within financial services, and Matt Cooper, my co-founder, he built a large bank in the US, Capital One, and really banking hasn't been transformed, and it's starting to transform now. But to be honest, we did have a pretty big vision. With a very high level, we were like, we think there's actually a new crop of global banks that can take over from what are really very regional, local banks that exist today, and so I think it's fair to say we were thinking big. If in terms of actual speed of development, so last year we forecast 150,000 customers when we started the year, and by the end of the year, we were around 500,000, and so that was just way quicker. And actually, you've seen it across the board, which is in multiple countries, and I think PwC had a recent report that said, by the end of next year, there are going to be 32 million digital banking customers globally, which is a pretty big number. So I'd say probably the industry response and the speed to market we didn't expect to be as quick as it has been.
So eToro has been around for around 12 years now. It originally started out as a vanilla derivatives platform. However, we've progressed a lot in those 12 years, and now the focus is on becoming the Amazon of finance. If you look around, there's quite a lot of websites and platforms that offer kind of different opportunities to invest. There's not really one platform that addresses all of your financial needs. So whether you're looking for long-term investing, short-term investing, whether you're looking to invest in regulated assets such as commodities, indices, stocks, or whether you're looking to invest in crypto, which is unregulated. It also goes further, the opportunity to DIY invest, or whether you're looking for somebody to manage your money, and even further towards managing your day-to-day banking. At eToro, we provide a one-stop shop for a lot of those investment needs, and we believe we're the only platform where you can actually hold regulated and unregulated assets in one portfolio.
Is there more demand in general for different types of financial services?
Yeah, I think, as I say, as compliance and regulation gets more severe and restrictive, so organisations find they need different elements of the ID process. So, a few years ago that may just be checking for a proof of address, but now accounts are finding that they need to be much more rigorous in their checks that they perform, both from a know your customer KYC perspective, but also from anti-money laundering. So yes, they're typically going out and finding a specialist for one of those elements of the service that they need to complete a transaction.
Looking at the whole ID marketplace, how has this changed in the last decade? How has it evolved?
Quite dramatically. I kind of relate it to analog to digital translation, because if you only go back just 10 years, organisations were receiving a photocopy of an ID document, and then somebody would physically look at that document. Weeks would pass, and then the customer, the end user of the applicant, may get a response from the organisation. Fast forward 10 years to now, customers can get the same completion on being onboarded in seconds. So the use of new technologies like biometrics, as well as being able to demonstrate that the person presenting themselves is a true live person through proof of life checks, has meant that there's been a massive shift driven by technology to provide more security both for the merchant but also the end customer as well, because these technologies allow quicker, efficient and more accurate checks to take place in the background as the customer is going through the onboarding flow.
The key thing is to do as much work as you can behind the scenes, because if you ask a customer to fill in 20 fields, they're basically, good proportion of them will just drop out and say, I don't want to do this. So the key is making the process as simple and intuitive as possible, but actually doing as much work as you can without ever asking the customer to touch anything. So obviously, as I said before, we will sometimes need to ask customers to take a selfie, take a photo of their ID, but we try and make that just the edge cases and deal with as many people as we can, just with our own data intelligence in the background.
So that is utilising things like tech software, face recognition. Is that something that you're...
Yeah, that's right. So, we use, a lot of the work we did actually data work. So we consume data from, all the big credit bureaus, but also from a load of publicly available sources. And we've got a big sort of AI brain that sits in the middle of Tandem that can then search all that info and make sure that everything a person's saying about themselves cross tabs and that it's not suspicious. It doesn't look like, for example, they're using an identity fraudulently.
How can you streamline the onboarding process to make sure that it's seamless, but also a good customer experience?
Yeah, so on that side, actually in 2019, we made a massive improvement. It was also a bit about the joke internally. We still had like a PDF a few years ago. Oh, can you fill us up? I think with everything, there's data protection and how to go fast, everything. The thing, our perspective is a bit different than others. We take more mainly enterprise merchants. So the time between onboarding and actually them going live could be a year. Okay, our competitors like PayPal or Stripe, they maybe be an hour. So I think it's a bit different perspective. Us is a true KYC that we need to know everything. But we've made a really digital page. Onboarding is a key element to be able to, onboard thousands of merchants that we want to do, and it's a key driver. But getting the data points is still one of the main issues in the industry. Is can you trust that? Is it the real proof of address? Is it the real KYC? And there's great companies doing it, but no companies in the world do a full automated KYB. KYC is possible, KYB process is still, no one does it automatically in less than 1 hour. It still does not happen. It will one day, but I think there still needs this human element. Do I want this business to be onboarded with us? That's because at the end of the day, compliance is still a real human-centric perspective.
So what are the benefits of a quick onboarding service?
A quick onboarding service is really critical, and from my point of view, the importance of setting expectations right up front. No one wants to go into a digital service without the knowledge of how long this is going to take. Typically, if you're not clear about that, that just causes failure demand. We're very, very impatient people. We're used to instant access and instant information, and expectation management therefore is critical. So what we do is we have something that says precisely how long onboarding will take, 4 minutes. We set expectations about what information the customer will have to provide, and that again is important to have. So just not asking for stuff that won't be front of mind. Previously on our onboarding services, we had information like we would need to know your national insurance number. That was a real failure demand creator. Instead of asking for that information, we asked for stuff that's top of mind, so your surname, your date of birth, your address, things that you'll know off by heart. By doing this, that ensures that customers go right through our onboarding service. The final thing that we also do is we don't assume that a customer is going to go down the happy path. You know, we're all under time pressures and we don't always respond to things when companies ask us to. So if our customers don't complete the process, or indeed if they don't verify, we go back and nudge the individual and let them start from where they've left off. And this means that you don't have to go through the frustrating experience of having to fill everything out again. And from our perspective, that's what a successful onboarding process needs to look like.
It's a lot of things happen in a very short space of time, which is a good thing from the onboarding perspective. So proof of life, the customer takes a selfie of themselves. They're very used to doing that, so it's not something that's asking for them to change their behavior. In that selfie, we do broadly two things. The first thing is we capture a live image of that person. We can then use that to cross-reference against an image that was taken previously from their ID document, something like a passport or a driver license. The biometric algorithms will then make cross-checks between the two images, the live image and the stored image, and make sure it's the same person. So that the person presenting for the application is the same person that you have the stored ID document for. But another crucial area is to ensure that person is actually alive, because theoretically you could spoof that by holding up a picture of the person. And you know that if that technology allowed for that image to be taken as bona fide, that person might slip through the net. Our technology wouldn't allow for that, because we wait for the live image of the person to blink, and that allows us to know that they're actually alive, real, and then the cross-checks happen in the background to ensure it's the same person in the image and the live capture.
How can biometrics be used to effectively deliver ID verification? One of the queries I always have around biometrics is it tends to get tokenized, and what happens, you've only got one fingerprint. It's very hard to reset your password if your password is your fingerprint. Mm-hmm.
So our biometrics allow for facial recognition and in ensuring that the person that is presenting is live. There's a couple of things there. The first is to, when the selfie is taken, it's not just a static photo, it's actually a very short video. That allows us to capture eye movement, which puts a tick in the box that this is a real person. But critically, that's not enough. So we use that live image and make a comparison using our algorithms with the stored image that has been already captured from an ID document, a trusted ID document, something like a passport or driver license. So the biometrics will make cross-comparison between the live image and the stored image and give a confidence level to the merchant that this is not just a live person, but it's the same person who is presenting as in the stored trusted ID document. That sounds like a complex process. It is, and you know we have something like 6,000 different global templates that we have in our database for these ID documents, so that we can check multiples of things, you know, holographs, the font, the placing of the signature, has the signature been interfered with. But the good news is that all of this can be done in seconds. You know, a customer can be onboarded with all of these compliant and regulatory checks being performed in the background in seconds. That's good news for the customer because they get their application done quickly and they stay in the process. It's also very good news for the merchant because all the background checks that they need to do are being done in the process flow of the application, and they're being done quickly and efficiently using our technology.
Tell us about how your onboarding process works and also how you've managed to get away from specific pain points.
So the onboarding process is pretty straightforward, it's quite simple. We have all the usual suspects. You have to enter your name, your email address, your current address, and because we are a FCA regulated platform, like other regulated platforms, we have to ask you KYC information, so know your customer information. This involves asking you about your income, your attitude to risk, how much disposable income you have to invest, and what kind of things you're looking to invest in. And so when you have registered on the platform, you have three choices effectively. You can transfer money in and you can start investing in the products that you'd like to invest in. If you're not quite ready to invest, we offer a $100,000 demo account where you can play with fake money but on the real life market, so you can get a feel for the platform. Alternatively, if you just want to surf the feed, see what people are talking about, ask people questions, you can do that. We have an 11 million strong global community, so there's lots of people out there to ask.
So what are the issues that prevent your customers from onboarding easily?
There's a couple of issues. Really, it's time and apathy that tend to be our biggest problems. People don't find the time to do it or aren't as interested in engaging with pensions. We overcome this by, again, nudging the consumer about the benefits of really understanding their long-term savings and getting to grips with the goals that they need for savings. The other more technical issue is we always want to ensure that the data that we've captured is valid and correct, and certainly validating email addresses is something that consumers very often forget to do, and I'm sure this is an issue amongst most industries. So what we do to overcome that particular issue is when a customer goes in and tries to log in, we remind them of the fact that they haven't validated. We reissue a validation email, and as some email service providers sometimes put our emails in junk, we also remind the customer to check the junk folder, because that's typically where that email might be.
Does being a digital-only bank mean that you're future-proofed against KYC AML regulation?
Yes, it's super interesting because this week, 14th September, which is Monday, the new PSD2 regulations came into force. So there've been some extensions granted, but ultimately what those say is that all banks have to use secure customer authentication. And what it means in practice is, some sort of second factor, which might mean, an SMS or a message on your phone, or even better, a thumbprint authentication in order to make sure it's you. So it's these three things. It's something you have, something you are, and something you know. And a lot of banks are frankly really struggling to put that in, because if you're, paper-based, how do you get a customer to step up and identify with a second factor? It's pretty tricky. We have the good fortune that all of our customers only service on mobile, so everyone's got an iOS or Android device, and all they have to do is normally tap their thumbprint or automatically register an SMS to actually proceed into secure customer authentication. So yeah, I think we are pretty future-proofed and proving out this week.
How can financial institutions effectively deliver KYC and AML solutions and checks without hampering the customer experience, but be able to do that at a mass scale?
So the hampering part of the question. So engage with a technology such as ours, where we can auto-complete the process very swiftly. That's just simple things like auto-completing an address, a postal address. If you think that we're very much a mobile-driven culture now, and individuals making applications on a small device, that is a real potential for errors to creep in. We can eradicate that using our technology by using an autocomplete functionality. So for things like an address, you just put your postcode in, the end user selects from a drop down, it auto completes into the merchant's template. You eradicate errors from happening at that point. Moving slightly further forward into the ID document scanning, if that ID document has got a machine readable zone, an MRZ, our technology will read that, and again, it will auto-complete the merchant's template. This dramatically increases the speed of transition of the onboarding, but also removes the opportunity for errors and human error to be causing bad data to enter the application. As far as scale is concerned, that's another great thing about the newer technologies. You can start very, very small. If you just do a couple of hundred checks a year, you're a startup or a small SME, that's perfectly fine. We have a license model that allows for that to happen. But as you grow, or if you're already an enterprise level organization, because we have an infrastructure that is supported globally through load balance server farms on all continents, we can scale to millions of transactions. So whether you're a small startup or a large corporate, the technology is very scalable for you.
That's all we've got time for in this episode of the Fintech Show. Thanks for watching, and make sure to check out the rest of the series on www.fintech.finance. Thanks. See ya.